Good evening, ladies and gentlemen. Today is the 1st of April, and the financial year starts with an expiry. Today was an expiry, and as all expiries lately, it was not a easy expiry to read. We had a steep down move after we started, followed by a steep up move led by short covering on the bank nifty, and we more or less closed at the high point of the day. From a difficulty perspective, today's expiry would have been moderately difficult, not one of the easiest of expiries, but definitely on a manageable side. That being said, today I managed to return about 7.5% on capital, and there was one really bad thing that happened to me during the trade itself, where one, due to a freak order execution, I lost almost 10 points to slippage. And I think one thing that you have to do when stuff like that happens is tell yourself that this is fully normal in the market. You can't get frustrated and try to revenge trade to capture that back once you've lost it. That overall worked out quite well. And I think there should be quite a few takeaways in today's video in terms of what do you do when you see a massive short covering up move. Tomorrow is going to be a holiday, Good Friday, so I will see you guys next on Monday. And once again, I apologize that I'm not at the office, so I don't have my setup, and that's why the quality of the video as well as the audio is not great, but that should improve from Monday. Thank you so much for watching. I hope you had a good expiry, and I'll see you next on Monday. Also, just to add, I will be putting across month on month just what has been my strategy, what has been the margins used, what has been the PNL like, and Ravi will be putting up this video a little bit later for the month of March. Thank you so much for watching. Have a great weekend. Take care.
Want to meet like minded traders and discuss option strategies, adjustments, and more? Just type in Discuss Nifty in your Telegram search box and join the friendly trader community.
Good morning, ladies and gentlemen. So, just going over what's happening now. So, the market is expected to open around 14,800, and from here, the visible range for the day would be 14,900, which is just slightly above the recent high that we made on the 21st. And yesterday's low would be 14,670. So, 14,650 makes sense, and this is what the OI data suggests as well. There are quite a few positions built up around 14,600, 700, 800, a little bit around 900. Yesterday we had immense call writing and put unwinding at levels up till 14,600, so we had put unwinding. Now today the question will be is, do these short sellers panic and lead to some kind of big up move or not, or was the smart money already expecting this move, which is why 14,800 is where we're opening. So if it was expected, then we won't see some big kind of short covering. But the idea will be wait for market to open and work around 14,900 and 14,650, and see over a period of day what kind of price action we're getting and how we can manage that position. So we'll wait for options prices to settle, and then we'll see what is a good point of entry. Okay, I have just entered this triangle for the day, and so 14,700 and 14,900 is the range that I'm working with for now. We'll have to see what kind of positions get built up. The idea will be very simple. If we head down towards 14,750, hold below 14,750 for 5-10 minutes, and or either cascade downwards, we'll move the puts away, and we head up that 50-point range 14,850, hold for another 10 minutes, then we'll move the calls away and potentially also take contra positions. Looks like we're holding below 14,800, and it's not much premium in the 14,900 call, so we will buy back some of it and shift here. Okay, so have rolled down the calls to 14,850. Reason is whatever short covering had to happen at these low call prices, a lot of it might have already happened, and obviously the OI data is not clear yet, but basically what has happened now is we're seeing lower level call unwinding, call writing at 14,800 and put writing at 14,800. So 14,800 starting to look like a favorite, for an expiry spot. And yeah, so in the process have now moved down the calls, and if we start heading towards 14,800 and above and we don't slide from here, then we'll also be moving up the 14,700 puts to 14,750. That's the plan for now. The reason I had to switch over from this to here is because my margin is very tight right now, so I need to reduce lot size if I'm moving closer. Okay, so the time is almost 10 o'clock, and what we're seeing is that attempts to move to 1400 is being sold into. The biggest gainers, which are Reliance, TCS and Infi. After the gap up, Reliance is quite weak, so Reliance has been sold into post gap up. TCS and Infi more or less sideways after the gap up. Financials as well after the gap up look weak to sideways, and we're seeing a lot of 14,800 short straddle positions being built up. Now the idea will be dips will expand these puts, but we will not be in a rush to balance this strangle. We'll not be in a rush to move down these puts or move down these calls at this point of time, because yes, we are seeing some weakness post the gap up and no strong up move, but we'll wait for 14,750 to be breached before taking any action on the put side, or even consider rolling down the calls. If we continue to hold this exact spot like below 14,800 till about 10:30, then I'll roll down 1/3 the calls to 14,800, taking in additional call side credit at that point of time. Okay, so data as of 10 o'clock is a lot of short straddles at 14,800, call unwinding at 14,700, good put writing at 14,700, 14,600. So right now 14,800 is looking like something that'll be tough to breach, and if it does breach, could lead to short covering, that sort of situation. And on the downside, I would say 14,700 is seeing good amount of writing, so more or less close to yesterday's low is what is seeing a lot of support build up. Right now we took support here and slowly but surely heading higher, and the idea will be is if we head here, then the guys who went short here will have to cover. It might make us make an up move, so that's what one has to be worried about, because calls were quite cheap and it might lead to like fair short covering, but at the same time doesn't seem to be too much strength in any of the stocks, and 14,800 seems to be a preferred expiry, so our position is more or less well placed to do that. We currently have 80 points on the downside and 70 points on the upside, and we are sitting on a credit of, let's say, 45 just on the strangle without considering the hedges, so it gives us more or less a break even of 14,650 on the downside, 14,900 on the upside. So that is pretty decent range, and for now we're not in any rush to make any adjustments. Where will we make an adjustment is if we make a new day's high or if we break down here to 14,750. So if we start heading there, we make an adjustment there. Otherwise we just hold on as is. Okay, the time is almost 10:30, and what I've done just now is roll down some of the calls to 14,800. We're holding below 14,800 for quite a while. A lot of these gap up stocks are looking quite weak. Bank Nifty might head up to 35,000, but should not be too much upside beyond that. And in general, the puts are starting to expand. So to balance some of that, 60% of our calls have been moved down. Now, if we start testing on the spot 14,800 again, then we'll move these back up. So that's the plan. Okay, the time is 10:30, and yeah, we're seeing this test of 14,750 and have moved down the rest of the calls from 14,850 to 14,800. Now, if we hold below 14,750 and start heading here, basically towards yesterday's low, then we will start risking off. So if we test 14,730 and the likes, we will move about 40% of our puts lower to 14,650. That's the plan for now. We have stop loss market on this at 41, so in case it starts to cascade, worst case we'll get stopped out at 41, and Yeah, that won't be the plan though. If this slowly expands to something like 36, 37, I'll automatically balance by moving the puts away for now. Okay, so with 30 points below 14,750, initially I had moved down just 60% of the puts, but now just there's a very high chance we'd just take support at 14,700 and move back up, but that is a concern for later. Meanwhile, we don't want to be so close to the money, so risking off completely on the 14,700 and moving to the 14,650. The other approach would be to move down the calls to 14,750, but they're extremely cheap now. I don't want a reversal to do any kind of damage. So okay, we move to the 14,650. The next adjustment will be if we test 14,700 head lower, we will move these calls down at that point by 50 points. And if we start heading over 14,760 again, then we will move these puts back up. Basically risk off type situation. And yeah, 10 minutes to 11 o'clock. Okay, second time in a row that this is happening, but basically what I'm doing wrong is misplacing stop losses. If you see right now what has happened. So we have the slightest of dips below 14,700, and these puts which are trading at 29. So I had a stop loss at 38, and for the briefest second that stop loss got triggered for the briefest second, and slippage executed at 40, 42, 4 points of slippage, and give me really bad pricing, and now straight back down. So if you see, just a very, very badly placed stop loss and massive execution error. The price doesn't even record. Yeah, the price doesn't even record, more or less, but got stopped out and in a very, very, very bad manner. So yeah, that is quite a big hit because that's quite a few points lost to badly placed stop loss, more or less. And yeah, by the time I re-entered the 14,600 put, quite a few points had been shaved off already. Anyway, that being said, I can't do much about it. So for now, I'll just hold this spread as is, and 14,600, 14,800, 200 point range still got 32, 33 points in it plus the hedge. So yeah, very, very unfortunate. Lost like 10 points there just to a random move, and yeah, it happens. I've been placing my stop losses a little more conservatively, but a 10-point move that was a little unjustified. Getting stopped out at the most. It's an execution error and it happens. You can't do much about it. So this is a minute candle. So we're trading at 27, 1 minute, 30, 1 minute. The chart shows only a high of 37, but we got stopped out here at 42 due to the slippage, and then crash back down. Yeah, did not have time to move up stop loss or see that it could potentially be triggered, because more or less what was happening is that we were at 32, so 38 is still 20% away. Anyway, that happens, and right now we are 100 points away on each strike, and we're gonna hold this position for now. Okay, the time is almost 11:30, and for now the 200 point range is looking quite comfortable, and the idea is until 14,750 or 14,650 not to make any changes to this. Maybe as we're approaching those levels, move away part of the position or move in from the other side partly. The reason now that I'm slightly more spread out is that I don't want to get bummed out by the fact that I lost 10 points to a random move. And one thing to keep very much in mind here is, at a time like this, the first thing we'll want to do is blame the market. Be like, oh, how is this fair? What is this? It doesn't make any sense. The price was at 32. Why did the order execute at 42? That is all pointless and it's not going to do anything. And finally, the only thing it'll do is frustrate you. And make you do something stupid, right? Like you'll be like, oh, I want my put side points back. Let me move this 14,600 to 14,700, and then I'll be able to get more points. That's a very bad idea. So um, don't blame the market. The market is exactly how it is supposed to be, and it will not be in any other way. This is how the market is. If we function in this market, we have to be used to these things. So that being said, my trade for now is a little slightly risk off and has a larger range, and the idea will be to stick to those rules for management. Now stop losses on each of them are at 33, just twice of what their price is, and the idea will be most of the time I don't want my stop losses to hit. I will change my stop loss against what most people say, don't never change your stop loss. Never change your stop loss if it is that kind of a trade where you're directional and you're giving up. In this case, it's a strangle. So I'm either going to shift or take in additional credit or balance from the other leg or from the same leg. But when my stop loss is hit, I will have big slippage. So I don't want to exit through a stop loss. I'll manually exit and change around. So yeah, that being a case, still a while to go. Still good amount of points here to capture. So 31 in this triangle itself. Hedge, we can say we've given about 3.5 points. So 28 points to capture, and that would still be a very good points total for the day. Okay, we're seeing this breakout now, and the idea will be to not do anything in a rush. It's expanding the calls, but we'll wait for 14,750, and 14,750 is achieved, then we will move our puts up and also consider moving these calls away slightly. So we will wait now and not do anything in too much of a rush. Okay, we're seeing this up move, and it's being slightly sold into, which is good, but we're still holding 50 points above, and potentially that is now an opportunity to take in a little more put side credit. What I'm going to do is move up 60% of the puts to 14,700, and because now these calls are only 45 points away, and if we then see that we're holding for more than 15-20 minutes above 14,700, I will move up the rest. Okay, the time is 12:48. What we're seeing now is after making a low at 14,700 and heading up, we are taking resistance at 14,750, and there is selling pressure at that point, but there is also demand. 14,700 is being protected, due to which we're seeing this demand zone here. So the idea now will be that if we head here again, so if we head here again, if the low of this candle is broken, so we head below 14,730 again, about 1/3 of our calls will be moved down from here to 14,750. I did this the last time as well. So 1/3 of this position will be moved down to protect the puts. If that doesn't happen, then we'll not be moving down the calls. Similarly, on the upside, if we start breaking towards the upside, the puts will be moved up as well. So we're closing in on the spot, more or less, taking in additional credit and closing in on the spot. There's still 2 hours 10 minutes left to go for averaging, so quite a while, and the entire idea during this period will be, I mean, our view is expiry can happen anywhere between 14,700 and 14,800. We don't want to be too quick to roll down our calls because 14,750 is a good amount of premium. The reason for that is if there's some kind of last moment short triggering, short covering triggered, and we have an up move from here, that will hurt us very badly. So for now, we continue to hold this. We will wait for 14,730 to break. Bank Nifty as well, I'm not seeing too much downside coming from there, and Reliance has been holding about 2,000. So will not be too early in trying to risk manage the put side. Okay, so this ascending triangle breakout pattern seems to be happening. Whatever said and done, I think 14,800 has immense call writing and will be protected, and that is where our calls are also at. There should be supply in this zone in case there is thing. What I'm more concerned about is it going here and then immediately reversing, because this pattern has been repeating in the past week, but you'll have this quick up move or this quick down move followed by a massive sell-off in the opposite direction, or so that's one thing. What's happening with this triangle? The calls have expanded to 23 and puts have come down to 19, still 40 points in this triangle itself. So and that gives us a break even of 14,840 on the upside, and on the downside 14,660, which is still a good range. These calls haven't particularly gone up immensely in price, which tells you that people who have sold this aren't in a huge rush to buy back. We're now holding 15 points above 14, now 20 points above 14,750, and okay, now these calls are starting to expand. What I'll do is I will wait for this zone to be tested. If this zone gets tested and we are seeing a move above 14,785, then I will get out of the calls. I'll exit all these calls and I'll move them to 14,850. So this particular strike will not be moving up the puts right now because the pricing on the puts is just going to be really crappy, and a reversal will inflate them immensely. So that's more or less the plan. We're in a controlled type of a trade for now, so we don't have to be too worried of a big short covering move. It is possible that those who went short here start panicking and cover, and that makes us go to a new day's high, but for now I'm thinking of that as an unlikely probability. So preferred expiry would be one of these three strikes, 14,700 and 5,800, and the idea will not be to try to manage this call side too quickly and then get burnt on reversal. 1 o'clock, still 2 hours to go for averaging. Okay, one thing to note is here we're seeing this is going to act as a resistance, and we're seeing basically this strong up move. These calls are not reflecting that price. Calls not going up, what does it tell you? The calls not going up tells you that there's enough people willing to sell the 14,800 call at 24, and that call buyers don't think it's worth more than that and are willing to buy it at 24, telling you that this up move is being used to sell calls. You see 14,800 is not particularly seeing any unwinding. So in the past 20 minutes we've seen this consistent up move, but we have seen almost no unwinding of the 14,800 call. That can be a good thing and a bad thing both. It shows that market still believes that it will be pressurized into holding below 14,800, but it also means that if everybody starts cutting at once, then there could be quite a problem. So the idea, we have a stop loss at 36, updated to 42, we change everything to 36, and yeah, so now our stop losses are at 36. In case there's a freak up move, we'll get out of that side and try to time our entry back in, but this is very low probability. This breakout here is very low probability. I'm not expecting that to happen. This area will act, this zone will act as a resistance, and more or less we'll get pulled back towards 14,550 is what I would work with. 14,550 straddle right now I think should be available for 70, 75, something like that. It's actually quite a good trade. I'm not taking that trade because I want a smoother risk reward, and that's the idea. For now, this triangle continues to have 37, 38 points in it, and we'll continue to hold it exactly as is. Okay, the time is 1:30. Didn't skip this part, but we're seeing this big up move that we considered as a potential possibilities if the guys who went short here started to cover. It pushed us to a new day's high, and from there we are now seeing a dip. So to manage that, one got out of the 14,800 calls, and that's where stops really help, and re-entered with 14,850 calls sold. Now we're seeing once again a reversal towards 14,800, but we've sold the 14,800 put at a pretty decent price of 27. So from where we have sold, this has expanded about 5 points. The idea now will be, if we see a down move then and start testing 14,800, we will move 60% of these calls, 40%, sorry, and create a short straddle at 14,800. And if we continue to cascade down from there, we will move the remainder of the calls down as well. So that's the plan. That up move more or less wiped out any gains that we had for the day. And right now from this current position, our lower break even is 14,750 and our upper break even is 14,900. So if we test 14,800 now and we don't, yeah, we test 14,800 now, then we will be moving down our calls and making a part short straddle. Okay, so one thing that's very evident, still 1 hour 12 minutes for averaging. So one thing that's very evident is the call unwinding has stopped to a certain extent, but we are seeing heavy writing of the 14800 put. So call unwinding at lower levels almost completely, and big 14800 put writing. The calls have been unwound at 14800 and higher, but there is still a considerable amount of them. So should not be something that easily goes. Now what's happening is, because of this heavy volume of put writing, you see this is only 15 points above 14800. The put is trading at 28 and the call is trading at 46. So even if you say 15 points of intrinsic value, the extrinsic value in this is more than 31, 32. Whereas the extrinsic value in the put, which is out of the money at this point, is 27. So heavy writing of this put, which is why the price will not go up, and quite a lot of fear around the call, which is why people are buying it at every dip. So that being the case, now we still have 50 up and down on the break even. So 14,750 to 14,800, we are more or less comfortable on the position. But at the same time, now as we start heading into the last 1 hour 10 minutes before averaging, we'll try to creep in our stop losses slowly. Right now they're quite wide, to not get carried away by a move like last week where we saw this very same pattern followed by this. So of course we can't use that as a reference, but that was a monthly expiry as well. Unlikely that we once again see that kind of a three-way move, but it's very possible, and the idea will be to be prepared to manage in case we see a move like that. Okay, the time is 2 o'clock, and to sort of deal with the fact that we are holding at 14,800 and up moves are being sold into, and also currently best case scenario of expiry for Bank Nifty is 33,500, and what the option data is looking is 14,800 on the Nifty. So to deal with that, have moved down the calls to 14,800, all of them. Created a short straddle. Currently we're more or less at break even. Created a short straddle at 14,800, and the current value of the short straddle is 70 points. So 70 points on the upside till 14,870 or till 14,730 is a good range, and we've got an hour left to go for averaging. In the meantime, currently this has a intrinsic value of 10 points and extrinsic value of 60 points, which is pretty good risk reward considering only 1 hour left to go for averaging. Okay, half an hour to go for averaging to start, and basically a bunch of things happen. I couldn't really record. We are at this point still break even, and yeah, you can go through my trade log, which I'll be sharing in the Telegram group right after. And currently we are sitting on the 14,850 short straddle with 0 intrinsic value and 50 points of extrinsic value, with half an hour to go for averaging. Bank Nifty massive up move, 300 points from 33,500, so not too many would be expecting that. But at the same time, despite being perfectly centered, the puts are trading more expensive than the call. So there's a downside bias from here. The market has had all kinds of biases in the day, and sometimes we've been with the market bias and sometimes against it. But more or less, this will be the final trade for today. Our break even is currently 14,800 on the downside, towards which fear is also more, and 14,900 on the upside, which I think upside should not be a problem. So what we'll do is, if we start heading to 14,830 and below, we'll move these calls in the money and make it an inverted triangle. Okay, the time is 2:38 and we've got 22 minutes to go for averaging to start, and we are at the 14,850 short straddle. This call is in the money by 12 points, but trading at 25. So basically, more or less, the extrinsic value on this call is very little. It's only 13-14 points. This put has 0 intrinsic value and 19.5 of extrinsic value. From here, ignoring our current mark to market, where we are up something like 4 to 5 points, we should be able to capture some decay provided there is no big break on either side, and even if there is, we've moved in our stop losses closer. So our stop losses on both of them are 37 right now. So in case there's a big break on some side, we should be able to close the day with some profit or at least break even. Now there was a downside bias earlier. Now it continues to remain an upside bias because if you see these puts are OTM and worth 20 points. They're 11 points OTM and are worth 20 points. These are 11 points in the money and worth 25. So there still continues to be a downside bias, and the idea will be in the last 20 minutes if we continue to stay range bound, and generally index likes to expire around round figures. So maybe Bank Nifty 33,800 and Nifty 14,850 seems like a logical conclusion. Already by now a lot of positions would have started building around those strikes anyway. So currently this straddle has like 45 points in it, and the idea will be to capture as much of this as possible. Buying back this straddle right now and exiting is the same thing as Nifty expiring close to at 14,810 or 14,900. It's essentially doing the same thing. You're paying that much in buying it back. So instead, trailing in the stop losses will be the approach here, as we've done with many expiries. We'll keep you posted. Last 20 minutes, let's see what kind of volatility can come in. Bank Nifty 33,800, 33,900 in between should be the range for now. The good thing about a straddle with 19 minutes to go for expiry, averaging, is that one of them has to go to zero. One of them has to absolutely go to zero. And so the only thing is how much damage will you take on the other side. And eventually, if you see that done, if we start seeing a slide, right now the intrinsic value is reducing to zero. We are perfectly centered on this triangle, but obviously since we made a down move, the puts side is trading much higher. So this continues to trade at like now 41, 42, and we will continue to hold. We have our stop losses, so we know that in a big move we will get out and we will move these stop losses closer, or if we see momentum we will manually exit. But with 18 minutes to go and 40 points in the short straddle, good position to have. 15 minutes to go, we're seeing slight dips below 14,850. This put is not particularly expanding. So when we were at 14,840, this was trading at 26. So with 10 points of intrinsic value, it assigned only 16 points of extrinsic value to it. So it shows you that it's not some big buying action that's taking place in this put expecting a downside cascade. We are now up close to 10 points or so, and if this cascades, this has to go to zero and move down the stop losses again. Very conveniently, no more a big problem with moving stop losses. I just change it here and move it. So if this does trigger at 38, I will essentially be able to buy back the same spread at the current pricing. If this triggers at 38, this will be worth less than 7, 8. And at that point, even if you sell the 14,800 or 14,750 put, there will be some value in it. If this hits at 38, this 14,750 put, just trading at 3, would have gone to 10 plus. So you'll be able to recover about 10 points easily from that side, unless we have another situation like last week, which is very rare, that can't be taken as a standardized expiry criteria. So currently 16 points of extrinsic value here, 15 points of extrinsic value here, and the total value at this point less than 40. So we'll continue to hold this, and yeah, 13 minutes to go for averaging. Okay, doesn't make sense in looking at OI and all that. Now basically all the positions you'll see around will be around 14,850 and 33,800. So looking at it is a waste of time. Currently the only thing that we can look at is our risk reward, right? This is trading at let's say 36, 37, and we have our stop losses individually at 38. So once the straddle itself, let's say, starts trading at 32, 33, we'll move that stop loss down on both to 34, 35, and like that we'll keep trailing into the averaging. Okay, 9 minutes to go for averaging. This call is in the money by 11 points, 10 extrinsic value, 15 extrinsic value on the put. Now, one of two things will happen here. As soon as we hit averaging, either we'll see a big move, which could be upwards of 50 points times, or these options premiums, both of them will crash and potentially both end at zero. One of those two situations will happen. So what we'll do now is move our stop losses on this. We'll move this to 32. So if 32 hits on this, we'll be losing from here. This would have compensated for it quite a bit, and we can probably get a good premium from the 14,900 if 32 stop loss hits on the 14,850. Currently it has 37 points, but since we are just 8 minutes away from averaging, we're going to keep our stops very tight. Okay, 2 minutes to go for averaging. Currently this triangle is worth 31.32. Stop losses are at 32, and yeah, we're going to see one of two things, either a big move or a complete crash. In case there's a big move, I have these orders set up to exit whichever direction there seems to be momentum in, and yeah, that's about it. Not much else. We'll keep you posted. Averaging should start in a minute. Okay, averaging has started, and we are basically, this triangle currently has 4 points of intrinsic value. The call, that means, is more or less at this point worthless, and the put should have a value of 2. And in the averaging, we'll see that will move up and down, up and down. Now the idea will be to keep reducing stop losses. Currently triangle is worth 22, 23. It's crashing, right? So averaging started, it is going to crash. We're going to set stop losses on both of these at 23 and keep trailing. That will be the plan for now. Okay, I have updated the stop losses now. Yeah, it's updated at 24, and currently has an intrinsic value of 6 and an extrinsic value of 15. So it's still good to hold. The main issue might be with the call. That means this has to be worthless. We'll continue to hold and trail our stop losses down into averaging. So currently we are in a good profit, so like 25-26 points, and we're going to try to keep as much of that as we can. Okay, 7 minutes into averaging, I've moved the stop losses closer to 17. Looks like this call is actually going to be worth something. That's what it feels like at this point of time. We did start averaging slightly below 14,850, and now we are holding 14 points above. So this call might actually retain some value. But even if this does expand, this still has 3 points left in it. So 3 points, 3.5 points is a lot. So we still have 22 minutes in averaging. Anything is possible. But meanwhile, currently the spread is trading at 14. We're going to trail our stop losses closer at each 2 minutes that go by. Okay, got stopped out on the call side at quite bad prices, 18, 19 and so forth. That's fine, at least we got out there, and then we re-entered by selling the 14,900 for 1.3 to 1.8 in that range, and currently we are sitting on a further potential decay of 2 points. 2 points is a lot. 2 points will cover more than twice of today's charges, and setting stop losses at them on them for 4.5 each, and we'll keep reducing forward. Okay, so stop losses are set, and we can receive an additional decay of 1.6 points from where we are currently. So that should be more or less the close of the day. It was a tricky day. The last minute up move could have been horribly dangerous, and yeah, what a great start to the year. It just shows that markets are not planning on easing up anytime soon, and will continue to remain almost to a certain extent random at this point. There's no logic behind market moves these days. So we'll let you know once we start getting squared off. Okay, till we get auto squared off, there is still 8 minutes, and there's 80 paisa here. This 20 paisa is anyway gonna go, so 80 paisa, 60 paisa for the taking, even lesser. And at this point there's no way either of those would be in the money, but just for kicks we will reduce our stop loss to 2.5, and that should be the last modification to the order. I used to previously have to input each stop loss, and that used to be such a headache. I don't think I could have traded without my mouse if I didn't have this software. Okay, after an intense day, more or less the day is done. There is 35 pies in this, and we'll get auto squared off in a minute. And yeah, 15 pies on the hedge, which we might as well consider written down. Overall for the day, I think we should be up slightly above 30 points, and it's a good enough outcome for the day, considering that we had some horrible slippage in between and some misexecution, and yeah, we're not keen on the up move towards the end as well. Was not completely sold on it, but turns out that's what happens. People short the market, and then everybody covers in a hurry, and we make new day's highs. These are the new normals. So any second now, we should start getting auto squared off by 0 there. A good start to the financial year, that's for sure. Okay, all the orders are cancelled. Hopefully we don't buy it back for more than anything like 40 paisa. We're buying for 2 paisa and 1 paisa, that's good. Oh, and we're actually able to sell the hedge as well. That's very interesting. Okay, nice. Somebody actually buying the hedge. Okay, nobody's buying the 15,000 call. But yeah, that's that. That's the end of today. Ended at 10.10, a good 7.5% return on margin used. And I will catch you next on Monday. So have a nice weekend, guys. I'll see you on Monday. Bye bye.
Thank you for watching. Please post any questions you have in the comment section. Also, do not forget to like and share the video and subscribe to the channel. To find us on Twitter, Telegram, and Facebook, use the username NiftyBN. Also, we post some of our trades to the community tab, so do not forget to check that from time to time.